So everybody's eyes is on CPI numbers for July. All the investors, everybody is looking at it, and if you know, CPI is a very very important indicator which literally measures the average change of how much price the consumers pay for goods and services over time. So let's talk about the expectations. What were the expectations? Where the number came in today, and what impact it will have on stock market, what Fed might do in future, whether it will push the rates up or it will keep the rates steady. So we'll talk about all of that in today's podcast. So before I jump into the numbers itself, I just want to talk about the difference between CPI and core CPI. You may have heard about these two terms, and I used to get confused by these two terms. So CPI is essentially average change in prices paid by consumers for specific goods and services. Again, it includes everything, which means your food, housing, transportation, healthcare, and more. Uh, the core CPI, the main difference is that it excludes the things which has that short-term price swings. For example, food and energy prices. So that is not included in core CPI. So that is essentially the main difference between CPI and core CPI. So let's talk about what were the expectations. So I pulled these numbers from one of the news sources, reliable news sources online, and these were like the expectation. The CPI was forecasted to rise 0.2% in July. It was around the same in June. Core CPI was forecasted to rose 0.2% for month of July. Year over year rise around 3.3% for CPI, for core CPI around 4.8%. So let's look at the exact numbers. So these are, so it's literally in line with whatever was predicted. So the consumer price index for rose by 0.2% in July. Let's look at what is the largest contributor for this. So shelter, which means essentially the rent that consumers pay, is the largest contributor among all these increases. So basically, it consists over 90% of the increase. So if you think about it, if somehow we can stabilize rent, we can stabilize energy prices, you may start seeing a cool off in inflation going forward. That means, which is good for economy, which is good for stock market, right? So right now it's still increasing. So let's look at the exact numbers here. So the food items close to again zero point 0.2, exactly what it was in month of June. Energy went up this month, like you see here. In June it was, and the main reason is rise in crude prices. I was talking about it on Tuesday about rising crude prices and how it may impact the energy sector. Like literally, all of those companies are in direct correlation with where the crude price is headed. So you need to keep an eye on whenever you are tracking the energy sector. So food and energy, it's around 2%. Shelter around 0.4%. So again, coming back to what I said earlier, shelter or rent is one of the main contributor toward these CPI numbers. And if somehow we can stabilize that, we may see the numbers that Fed is hoping to get. Like their goal is to get the inflation under 2%, right? And literally the Fed's policy is, I'm hoping that they will not increase the rate further. They'll keep it paused going forward. Literally, I was expecting that if the CPI numbers are in line, they'll keep the rate paused for now. And if the CPI came in hot, then you may see like rates going up again, but I don't think that's happening. So CPI numbers are in literally line with what were projected. It may help with stock prices, at least in short term. So we'll see.